Let's look at the market opportunities. What's happening around the world? Currencies, commodities, stocks, bonds, properties, precious metals, energy, commodities, food prices. What's happening? What impact it's going to have in terms of various parts of the world? All these things need to be answered, isn't it? So if you are an investor, you have to be clear on all these areas. Inflation is dominating every part of the world. This is a major concern. Is it going to be inflation? Will there be a stagflation somewhere? I'm not sure. Deflation is a possibility in many parts of the world, but we have to necessarily understand definite possibility of inflation or stagflation is there. Another brave new world is going to produce technology-driven metaverse. Is likely to see they're all intertwined, many different sets of technologies, operating models. Significant commercial opportunities are also going to be evolved on all layers of technology that are essential core enablers. Common prosperity is a theme, came from China. More important thing is to recognize the new initiatives on the climate resilience. What happens to impact investing? Impact investing aims to achieve the dual goals of positive social and environmental impact alongside with financial returns. In 1990, we used to talk about socially responsible investing, then it moved into ESG. And the impact of this, we need to look at it in the current context. So if you look at the funds of funds, you have substantial portion goes to venture capital. Private equities are there, but nearly 40% is venture capital, 30% is private equity, real estate is around 14%, debt is around 5%. Now if you look at the real estate is around 5%. Now real assets is the major force, nearly 15%. So I should say real estate 5%, real assets 15%, and overall impact is visible. What happened to the geopolitical tension in the current war? What will happen if it gets tough? What will be the impact in terms of the overall financial markets? If there is a ceasefire quickly now, at least after 23 days, what happens? Or if it continues, what will happen to the financial markets? Rates, interest rates again. FOMC, Federal Reserve has made it very clear they're going to increase it. This time they started with 0.25%. What happens to your domestic agenda? Every central bank, are they going to have similar synchronized move, or will there be a differentiation? We have to look at it objectively. So what happens to the oil price? Commodity prices, what will happen? Whether it is wheat or oil, energy side, history suggests when it comes to equities, they tend to recover relatively quickly from geopolitical conflicts and deliver positive returns. What will happen to the global growth? We said 4.4% in January. It was also revised downward from last year, October indications. Now, we don't see more than 3.5 to 3.7. So where do we allocate the money, portfolios? Is it cash? Is it gold? Is it hedge fund? If it is bonds, which part of the bonds? Emerging market bonds, or advanced economies bond, or corporate bonds, or sovereign bonds? If it is equities, which part of the equity? What is the allocation model? What will happen? Which sector you will put it? Equally important. Which sector will grow? Global sector performances you have to analyze and recommend yourself where to give the tools to our portfolio managers. So is it communication of services? How it is moving? Is it consumer discretionary? Is it, I'm talking about equity side. Is it consumer staples? Is it energy? Is it financials? Is it healthcare? Is it industries or information technology? Is it on the material side? Is it on the real estate side or utility side? Where it will go? If it is interest rate outlook, how Fed will move? We have seen the first reflection. So, how many times? 6 times, 7 times? Strategy, historically poor performance for global credit continues. Maintain market weight on emerging markets. Overweight Asia and investment grade, underweight in Latin America. Again, caution towards China property into March earnings season. Foreign exchange outlook. Forecast for G10 currencies. Forecast for emerging currencies. Which part of the world we are going to look at it. All these issues needs to be deliberated in substance and then bring to the table. That's what precisely we are doing it. Now, if you look at the big picture, the opportunities are endless in real terms. Now, the reason why we need to do this is to understand the dynamics and then make the right decision. So you cannot make the right decision unless you understand these changing variables. Now, these changing variables are very many. Now, it can go either way. Global economies are changing. IMF is saying the reflection of the changing phase of the war. Worldwide COVID situation again resurging. It's not over. World Health Organization has said worldwide we lost around 500 million people. Impacted rather, I should say. We lost around 6 million people. And Qatar itself, we lost around 676 people. We had an impact of around 360,000 people. Vaccination-wise, worldwide, 58%. Qatar vaccinated around 77%. The overall, the wealth distribution changing. Global wealth is changing now. If you look at how this will move, 25 trillion will come, around 60 to 65 trillion will evolve additional. 25 trillion will come from North America, 22 trillion from Asia. Predominantly, that's what it is. Europe will be around 10 trillion. Gulf itself, if you look at it, Saudi Arabia has got around a trillion. UAE is around 600 billion. Bahrain is around 70. Kuwait is around 265. Qatar is around 265. Oman is around 65. How it will move from 2.2 to 2.7, around in aggregate terms, averaging at around 3.5%. How do you fix the global inflation interest rate and how we manage this? Where it will impact? It will impact the advanced economies to the tune of around 10%. 25% for the emerging markets. Maximum it will hit the low income countries, 50%. So you have to be careful where it will be in terms of oil price. Already you have got 40% on oil, Brent or US crude, nearly 30% on the gas side. What will happen to OPEC and non-OPEC? What will happen to the gold or other industrial commodities? Now, if you look at the food prices, that's a major concern. Already you have got the corn has gone up by nearly 30%. Wheat is around 40%. Soya bean is around 30%. So these are happenings. Central bankers, monetary policy and fiscal policy has to align. Bank of England is already rising consistently. And Fed is also now indicating now they are on the go. First one was done. And where the impact will be when it comes to diversity, what sort of investments you will be doing it across the globe in terms of social risk management and ensuring ESG compliance. All these are happening in this defining moment. Let's bridge the knowledge gap and work together to further consolidate our position and create wealth protection and wealth creation. Both are important for us to sustain our meritocracy.